listener production.
Hello, Natarsha Belling with you. Welcome to the afternoon edition of The Briefing. The major story this afternoon is the economic turmoil in the United States that is having major consequences right around the world, including here in Australia. Fears of a US recession are growing, with Wall Street seeing one of its worst losses in 4 years. Some experts are labelling it a Trumpcession as the fallout continues over Donald Trump's hefty tariffs and also the slashing of government spending. Billions of dollars was wiped off the Australian Stock Exchange today as the economic jitters were felt across the world. Mr Trump argued there would be a period of transition because, quote, what we're doing is very big. Commentators in the US saying mixed messaging from the US government on economic policy is having dire consequences.
And if you have different people in the administration giving different messages, I mean, the Commerce Secretary and the President are having different messages on the same day. That's not giving the market any sort of ease or certainty for investors. So I wouldn't be surprised if we have an even greater crash.
A number of major companies took a hit on the share market today, including Tesla. Its shares plummeting again. The stock is now down approximately 45% since its all-time high of $1.5 trillion late last year. Elon Musk admitting on Fox News today, taking on running the US government's efficiency department as well as Tesla is hard.
Yeah, I mean, really, I just don't want America to go bankrupt.
So it's a call to action. You're hearing a call to action.
Yeah.
You giving up your other stuff? I mean, how are you running your other businesses?
With great difficulty. Yeah, I mean...
But there's no turning back, you're saying?
I'm just here trying to make government more efficient, eliminate waste and fraud, and so far we're making good progress, actually.
So is the US heading for a recession? And what does it mean for our economy and our share market? Joining us this afternoon for a deep dive on the economic turmoil in the US is Scott Phillips, the Motley Fool's Chief Investment Officer. Scott, thanks for joining us. We knew it was going to be an interesting ride under the Trump administration. Did you think this would happen to the stock market?
Tash, g'day. You use the word interesting as in the Chinese proverb, may you live in interesting times, and we're definitely there. Did I predict it? No, I don't do predictions, mate. You probably know that about me. But was it possible? Yeah. And really honestly, given the policies that Trump has enacted, and to be fair, it wasn't quite about the pre-election. This was the policy he took to the election. Those policies are likely to cause economic pain in the US. That is going to mean economic pain for the markets, and that will eventually, either directly as it has now or in time, make its presence felt in Australia, both in the physical economy and right now on the stock market.
It's a great example, Scott, that what happens in America does directly affect us. Break it down for us here in Australia right now, because there's the big tariff question mark. Is that going to affect us with steel and aluminium? And also the effect on the share market for us.
Right, so let's start in the US. We start with tariffs that are going to be put in place if Trump does follow through. Now, what tariffs do, it is... this is not a political statement. Economically, tariffs are a terrible policy. No matter who puts them up, I've criticised the Future Made in Australia stuff on our government putting subsidies in place. They're the same impact. What they do is they push up the price of local and imported products, in this case for Americans. The imported products become more expensive. Yes, US companies might be more competitive as a result, but that's because they charge for. So the US consumer is in for probably, economically, we know theoretically at least, and in the past, higher prices. What does that do? It puts up inflation. It cools economic activity. The Atlanta branch of the United States Federal Reserve, that's their version of our RBA, they are predicting a recession in the US. So that's where we start. The stock market says, well, hang on, recessions are bad for business, they're bad for employment, they're bad for spending, they're bad for profits. So we see the US market fall. So that's the US bit directly, and that's how we get to this point of why the market is now worried about tariffs. Take it forward to Australia then, and a couple of things are going on. Let's start with the physical economy, as you suggested. There's 3 ways we're going to be impacted by this. The US is the world's largest economy, and it's by far the largest consumer economy. Now, as those ramifications are felt in the US, They can only be felt around the rest of the world when it comes to trade in general. Tariffs aside, if the US has a recession, tariffs on Australian products or not, we're going to have less demand for Australian products by Americans, but also indirectly. They'll buy less from China, less from Europe. Europe buys less from us. It'll have a cooling effect on the overall economy. So that's the physical impact of just economic slowdown in the US, or going backwards if it does happen. The tariff bit on that is then you ask about aluminium and steel. Basically, it makes it less likely we can sell our aluminium and steel to the US, and everyone's going to be in the same boat. In a perfect world, if we're lucky, we find other markets. When we had coal and barley and other things that China put tariffs on, we found other markets for those. On the flip side, we didn't find other markets for our wine. And so winemakers had a really tough time. If Australia can't find markets for aluminium and steel, we will have lower sales, lower profits, probably lower employment. That's how that ripples through the economy. But here's the third one. When we have tariffs on aluminium and steel, when China has them, and China has tariffs on other products as well, who is our largest trading partner? It is China by a mile, and it's iron ore in particular. Iron ore, guess what, gets made into steel. And so there are a couple of things we need to be mindful of here. It starts in the US and ripples out from there. The last one you asked about was our stock market. Two things there. One, if our economy does stutter, then so will our stock market, again, for the same reasons as I mentioned in America. The other is that money is global, capital is global. And so as you find people saying around the world, hey, we don't want to pay as much for shares anymore, that just has a ripple right around the world, and we're feeling that in our market today.
So it's been labelled, Scott, the Trumpcession. Do you think that's correct? Because even overnight and this morning in the US, you've seen very pro-Trump commentators actually saying, well, this is what you get when you have a confusing message from the US president, and then even some within his own government put out a different message. No one knows what's going to happen.
So the last point is absolutely right, mate. Maybe there's a recession, maybe there's not. This is all still best guess stuff, right? We don't know. What we do know is historically and theoretically, tariffs put up prices, higher prices lead to inflation, higher prices generally lead to lower economic growth and possibly a recession. So yes, if it is to happen, it will be a Trumpcession. I should say, to be fair, recessions happen every 7 or so years on average. We haven't had a proper one in Australia for 30-something years, right? The COVID one was big, but it was artificial and government kind of filled in the holes pretty quickly. A real business cycle recession has been ages coming. So is it only Trump? Is the economy a little more brittle? Maybe were there always going to be risks? Yes. But this is very clearly the fault line. This is the catalyst. If there is to be a recession this year, it will be these tariffs that push us into that recession. Whether it was coming or not, whether it would have happened eventually, we can debate those things. But yes, this is absolutely a Trumpcession, whether we like it or not.
So, Scott, just to recap there, we've had billions of dollars wiped off the Australian stock market. We've seen bank shares in particular take a big hit. That affects also your mum and dad investors with bank shares, but also our super. From a big point of view, is this good or bad news?
That's a good question. So it depends how old you are. If you are, if I bought a steak for $10 yesterday and it's on special for $9.80 today, I might as well buy another one, right? So, as an optimist and someone who does believe in the long-term future of capitalism, investing in the markets, human endeavor, frankly, then I think the future is bright, right? Despite, I think there's some really big clouds on the horizon. So if you look through those clouds to where we're going, not where we are right now, the future will be bright regardless of what Trump does well or badly, is my strong opinion. But to your point, right now, it is a big deal. Balances will be lower. Someone opens their brokerage account this afternoon and checked it for a couple of weeks or even a couple of days, it's going to be lower and it's going to be meaningfully lower and it's going to feel bad. But if you're a bargain hunter, you want to buy. If you're someone in retirement and you want that capital, you hate seeing it go down because you're thinking, hang on, that's tomorrow's bill, that's next year's car, that's whatever it is. So it's a big deal for people who aren't adding regularly to their investments. If you're working still, if you are adding to your investments, or if you're just simply reinvesting dividends, lower prices are actually good. It feels bad, right? It feels terrible. Very few people walk up to the clothing store and say, oh no, those jeans are half price. That's terrible. I only bought some last week. You go, well, I'll grab another pair of jeans. I mean, you might wish you'd waited, but buying something cheaper is a good thing. Warren Buffett's a great investor. He talks about, being unhappy the petrol price has fallen because you've already got a full tank of petrol. You're going to fill up at some other point. You're going to want more. That's kind of the right analogy, right? So again, by the way, it still could fall further. It could still fall a lot. It could fall quickly. All those things are absolutely possible. But remember, the COVID drop was 38%, right? Massive. We made most of it back within a month. We're now well and truly above where we were before that. And so it goes.
Roller coaster ride indeed. Scott, thanks for joining us.
Thanks, Tash.
And that was Scott Phillips, Chief Investment Officer with the Motley Fool. And that's it for this episode of the afternoon edition of The Briefing. We'd love you to subscribe or follow us so you don't miss our episodes or our deep dive of the day. You can also follow us on our socials on Instagram at The Briefing Podcast and on TikTok and YouTube. Just search Listener Newsroom. That is LISTNR. And we'll be back in your feed tomorrow at 6 a.m. I'm Natarsha Belling. See you tomorrow.